Hey guys, how's it going? It's Andy from Googl Investing. Happy Monday. I'm recording this on a Saturday, so if everything goes correctly, this will be released on Monday. On this channel so far, I've tried to stay away from the really clickbaity titles, stuff that, if you've been on YouTube at all, you know exactly what I'm talking about. And if you just search on YouTube at all for stocks that'll make you rich or stocks that will double, you'll find pretty much every investing channel has talked about it recently, and I've tried to stay away from that. And while I've been guilty with a little bit of clickbaity titles about stocks to buy, I try to stay away from stuff that'll make you rich or stuff that'll double in the next year. But when I talk in this video about a stock that I think could double in the next 12 months, I feel like people should take that pretty seriously because I try not to do it as often. Also, if you look at some of these other videos posted on YouTube, there's a lot of garbage stocks out there. I open these videos kind of expecting to see maybe some quality stocks on there, and I see these stocks that I've never heard of, and it's pretty obvious that the person making this video has not really done the research and doesn't even know what the company does. And so in today's video, I'm going to be talking about a stock that I think could double in the next 12 months. And it's a stock that I've already put my money where my mouth is. I currently own 100 shares of this current stock. And so it's something that I'm not just talking about a stock that I think has potential. It's a stock that, in my own opinion, has a lot of potential, and I've put my money where my mouth is. In today's video, we're going to be talking about Sonos, ticker symbol SONO, and I'm going to explain why I think it's possibly the best deal in the stock market that I've seen so far. I spent a lot of my time just looking at stocks overall, and I haven't been this excited about a stock since I originally saw Snapchat at the end of 2019. The way this video is going to be structured is I'm going to be talking about some of the news stories that have been pushing Sonos up so far and some of the reasons why I think it's a great opportunity. Then we're going to be talking about the fundamentals of the company, take a look at their balance sheets, their revenue, debt, that type of stuff. And then we're going to finish up the video on TD Ameritrade, and I'm going to talk about some of the technical analysis that I see and some reasons why I have a lot of optimism for the company going forward. Before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Everything in this video is just me giving my own opinions on Sonos, and you need to do your own research before taking any positions. Also, if you've been enjoying these videos, really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. We're getting really close to 5,000 subscribers, so thank you all for all the support. So for those of you that don't know, Sonos, ticker symbol SONO, is a smart speaker company, and it's considered the highest quality speakers in the overall space. And so when you look at this market, it is primarily dominated by some of the big names, and it's stuff like Google, Amazon, Apple. And for most of the companies that I talk about, if all of those massive players were involved, I would want nothing to do with it. But we've been seeing some numbers about how quickly this market has been expanding and how 90 million households have smart speakers at this point. And that just continues to increase year over year. And so there's a lot of momentum going behind this sector, and I think it's really exciting. When you look at the other competitors in this market, stuff like Google and Amazon, they're not exactly targeting the same market as stuff like Sonos and Apple. And for most of Apple products, if you're competing directly with Apple, you're going to have a tough time. However, Sonos is the top of the line product, and they've kind of pushed Apple out at this point, and they're not really doing so well with their smart speaker that they released. When I show the market share by company, you can see that Amazon dominates this space. And one of the main reasons is Alexa is incredibly cheap. It's something that most people have an Amazon Prime subscription, and there's always plenty of deals about Alexa to try to get them into your household. And so it makes sense that they are the largest percentage. But when you look at it, some of this market share is starting to slide for Amazon, and that percentage has been taken up by places like Google and Sonos specifically. And so while Sonos only has 5% of the market share, it has doubled in the past year, and places like Apple have actually slid in the past year and have given some of their market share away to places like Sonos. And so it's really interesting to see Apple actually lose at something, because it's not something that they do very often. And their HomePod, which is something that I have not really thought about in a long time, has not been doing well at all. And when you think of Apple not doing well, you start talking about some potential rumors that have been going around the investing sphere recently has been a potential acquisition of Sonos by Apple. And when I look at the match between the two companies, I think it makes a lot of sense. Apple has the cash on hand to afford to buy a company like Sonos, considering they have $193 billion in cash on hand right now. The brand of Sonos is very similar to what we see with Apple, with high quality and extreme levels of brand loyalty. I saw some articles talking about the average person that owns a Sonos product actually owns 3.5 of them. So they're buying products that they enjoy, and they're buying more of them to outfit their house. And it's something that I always like seeing, a company where people buy their products and it's not just a one-time thing. It's kind of a you buy it and you're an owner for life type of mentality. And I really like that about Sonos, and I think that's a reason why Apple may consider acquiring it in the future. And so while Apple would have a huge impact on Sonos if they're actually acquiring them and would shoot the stock price up, this is only a rumor and it's not something that I would put my money on. If this was the only news coming out about the company, I would not have bought 100 shares at this price. But I think it's a potential that could skyrocket the stock overall, and it's something I want to be a part of. So like pretty much any company, you have to look to see how they've done so far during the pandemic. And when I was first doing the research on this company, I was expecting to see not so great numbers. Sonos is a high quality speaker, and similar to a car that most people would want to test drive it and would not buy a car online, I kind of thought the same thing with Sonos, with how good their quality is. However, the numbers that I saw is that the company saw a 400% increase in online sales in April alone, and that is a huge increase. So it's showing that people like this product enough and they're able to get enough information online that they feel comfortable purchasing it online without taking it for a test drive in a physical store. During the pandemic, they also saw a 50% increase in listening time, which makes a lot of sense. People are stuck at home and listening to music and podcasts is a great way to pass the time. But this is also kind of coinciding with the fact that they have started their own ad-supported radio station that is kind of the default player on Sonos products, and it's a way for the company to diversify their revenue sources instead of just being from physical hardware sales. And the last thing I wanted to talk about Sonos before we get into the fundamentals is the price target. And this was something that I talked about in my cheap stocks to buy video that really jumped out to me. Currently, Sonos is trading for just above $15, and the investment firm Citron came out with a price target of $30. That is a 100% increase and would be a doubling in price. I've been looking at price targets for a long time, and I very rarely see a price target this far away from the current price. A 100% increase is pretty unusual for me, and it shows how bullish Citron is on Sonos overall. And then when I go on and look at the options chains, this is a way that I kind of gauge the sentiment towards a company with, if there's more calls than puts, it's considered very bullish. And when you look at Sonos overall, there's 9,600 calls sold in the past week and 500 puts. So things are very bullish overall, going from Citron with a price target 100% higher than the current price, and the ratio of calls to put being so skewed towards the call side. Going towards the fundamentals, I was very surprised with the numbers that I saw there. When I put up the revenue, I think it's important to look at the annual revenue because Sonos is a company, like many other tech companies, that does very well during the holiday season, and so you see an unusual spike in revenue during that time. But if you look at the annual revenue, it has increased every year since 2015, and it's in a pretty good spot. Revenue did drop in the last quarter year over year by around 20%, but I'm expecting to see a resurgence in their revenue in the next quarter based off of a new product line that they released and the 400% increase in online sales that was seen during the later parts of the pandemic. When you look at long-term debt, this is usually where I start seeing some red flags for tech companies. Tech companies are notorious for taking out long-term debt to try to boost their sales or expand very quickly. And when you look at Sonos, it is tiny with around $25 million in long-term debt, which is very surprising to me. When you look at the long-term debt to equity ratio, this is also a place that you see some red flags, and I was very impressed to see how small the debt to equity ratio of 0.07 is for a tech company. Not only do they have very low levels of debt, they have relatively high levels of shareholder equity, which is very impressive. And then when you look on cash on hand, this is how I determine how safe a company will be for a long-term play if we're going to see some tough times in a recession. So as I mentioned, the company has $25 million in long-term debt, and they have $280 million of cash on hand, which is, it's crazy to think about how much higher their cash on hand is compared to their long-term debt. Looking at the all-time chart, the company has been public for only a couple years, and while I normally don't like buying recent IPOs, the company has been public for long enough where the shareholder lockup period has already gone past, so I'm not as worried about potential volatility based off of insiders being able to sell their shares. So that's very bullish for me overall. The one-year chart makes a lot of sense with the fall in the overall market and the steady recovery that the company has seen to a recent price of around $15. All right, with that out of the way, let's head on to TD Ameritrade, where I want to talk about some potential price targets that I'm looking for and some resistance that we're going to have to break through for this to be a fantastic trade overall. All right, so here we are on the 4-hour chart, which is one of my favorite ways to look at potential swing trades or just be able to see price movement for a stock overall. And so the thing I wanted to point out when I came on here is the fact that we're going into some serious resistance for Sonos overall. As you can see, I've charted it already around the $16 mark. We had a nice move to the upside that almost reached $17 and then immediately sold off back down to the $16 mark. And so that is a pretty solid resistance. And as we're coming into the recent days, we've had some moves up during the morning and then it's usually faded towards the end of the day. what I'm seeing there is there's not a lot of momentum that's going to be able to push this stock above $16 right now. And that was a huge reason why I decided to sell a put against Sonos, because I don't think it's going to be able to skyrocket in the next week. So I'm hoping to have the stock fall below $15, be able to get it at a nice discount, and be able to pocket the premium at the same time. One of the ways that I like being able to take advantage of buying at a resistance is buying near a earnings report. This is not something I do very often, but it's one of those catalysts that can push a stock through a solid resistance because the momentum is usually stronger than the resistance is. And so at this point right now, if we get a surprise earnings report and the stock pushes to above $16 and breaks through that resistance, I'm expecting the stock to skyrocket. When we go to a little long term, there's a lot of open space after you break through the $16 mark. This $16 mark goes back all the way to, September of 2018. Once you get above that, you have a lot of open room to go. And at that point, I'm expecting the stock to have a kind of meteoric rise at that point. So I'm waiting for the $16 mark to break, and then I think I'm going to go all in on this stock. The stock has rebounded since lows of around $6.50, and I think there's a lot of momentum on its side. I think the product is great, and I'm just waiting for the $16 resistance to break. So overall, I see a lot of positives in Sonos, ticker symbol SONO overall. They are the highest quality product on the market, and they are slowly taking some of the market share away from giants like Google and Amazon, and they've shown that they can outperform companies like Apple, which are notorious for taking market share away with their high quality products. When I look at the fundamentals, I was very impressed to see the steady increase in revenue over time, the minuscule long-term debt, and the fantastic debt to equity ratio. Looking at the charts, there is some resistance that we have to break through around the 1550 mark. And I'm kind of targeting the next earnings report as being a catalyst that will push the stock potentially through that resistance. I always mention that earnings are a great time to break through steady supports and resistances. And so if we see a surprise beat for the upside, I expect the market to reward the company and push it through that resistance, and then we have clear sailing for a while. You do have to worry about a potential recession because we really don't know how the company is going to fare during that. They have very high quality products that are expensive, and we really don't know how low the demand is going to go if we get into a really tough economic time. So overall, I'm very bullish on Sonos overall, as I mentioned. I currently have a put that will expire in 6 days, and if that does not get assigned, I'll probably buy 100 shares outright and start selling long-term calls against it. It's just a way for me to hedge my positions and take more profit on these long-term positions. So let me know what you thought about my analysis of Sonos, ticker symbol SONO, in the comment section down below. Also, let me know if there's any stocks that you're looking at that could double in the next year. I'd love to take a look at them. Thanks for watching this video, and I will see you on Wednesday.